Hello everybody, I'm John, this is JP Strategic Investments, and today we're going to go over Rocket Company's second quarter earnings report. Now the first thing I'm going to do is kind of cover the major numbers, how they compare to analysts' expectations and their guidance, and then we'll get into kind of the rest of the report, anything that I thought was noteworthy, talk about some of the things that were said on the earnings call, and then finally talk about Rocket actually buying back some shares and what trades that I'm going to make to take advantage of that. So let's get into these numbers here. So first of all, for Q2 of 2021, we had a closed loan origination volume of just under 84 billion. We also had a gain on sales margin of 2.78% and a net rate lock volume of 83 or $83.5 billion. Now, all of this resulted in a revenue of about $2.7 billion and a net income of about $1 billion. So you can see the net revenue here, $2.7 billion, and the net income here of about $1 billion there. Now, both of these actually came in just under analyst expectations here. So if we look at analyst expectations, average analyst expectation for earnings was about 49 cents per share. That $1 billion in net income equates to about 46 cents per share, so a little bit less than the average analyst consensus there. And then if we look at revenue, average estimate for revenue, 2.92 billion, and again, revenue came in at around 2.7 billion. So they did miss analyst expectations, and actually they came in at around the low end of their guidance. If we look at the guidance for the second quarter that we got in the Q1 report, closed loan volume between 82.5 and 87.5, so that came in at right around 84 there. So the low end of their guidance there. Again, net rate lock volume came in right around the low end here. And gain on sale margin was right around the midpoint of their guidance at 2.7 or 2.75 there. So the numbers weren't really too impressive, but again, for any of you watching the stock, we saw it up over 10% today, at some points even higher than that. So, we have to look at what is really driving this movement here. I think one of the things that a lot of retail investors don't do is use the opportunity we have during earnings to kind of really figure out what analysts really care about. Because obviously, as we've seen from these numbers, they don't care about the current numbers right now. The current numbers missed slightly on all of the expectations. So, and the stock rose. So obviously they don't care too much about that. In my opinion, they're looking more towards the future, more towards what we're seeing from the guidance for Rocket in the next quarter. And what we're seeing is pretty much right about the same as they did this quarter. And that's really kind of what analysts were expecting from a revenue standpoint. We can see 2.46 billion. They're expecting a slight drop. And so if we look at Rocket, if they did the midpoint of this guidance, about 85 billion in closed loan volume, and if we apply to that kind of the midpoint of the guidance here for their gain on sale margin, that would equate to between 2.4 and 2.5 billion in revenue, which is pretty much right what they're expecting in revenue. What they weren't expecting, though, is it looks like they weren't expecting Rocket to say that their operating expenses weren't really going to increase. So you can see this average estimate for the current quarter for earnings, 49 cents per share. They barely missed that at about 46 cents per share. Analysts are expecting that number, or were expecting that number, to pretty drastically decrease down to 36 cents per share. But Rocket came out and said in the report and in the earnings call that those operating expenses, they didn't expect them to increase at all. And they made that very clear. They kind of reiterated that a few times. So I think that's one of the things that's really driving the stock today. There are a few other things that we're going to get to, but I think that is one of those main things, because that's about a 20% drop in earnings that analysts were expecting, that Rocket is saying pretty much isn't going to happen. Those earnings are going to stay at kind of their current level. So that is definitely a good thing for Rocket, that those earnings are going to stay there. And we get to see that that is one of the things that analysts weren't expecting, that now is kind of driving a little bit of the rise in the stock there. Now, a couple other things that I do want to talk about here. First of all, the AMROC segment here and Rocket Auto Sales, those seem to be increasing nicely. Now, obviously, they're not a huge part by any means of the earnings that we're seeing right now, but they're definitely showing that they could be at least a small meaningful portion of the revenue, of the earnings over the next maybe 5 to 10 years. So for long-term Rocket investors, that's definitely showing some promising signs right there in the growth, and could be contributing in a meaningful way 5 to 10 years down the road, I would say. The next thing that I want to talk about is actually an example that Julie broke down in the earnings call. And basically what she did is she was talking about how kind of their multiple segments, how they're taking kind of this all-inclusive approach to the mortgage process can really help them get more out of each mortgage than maybe some of their competitors. So I just want to play this segment of the earnings call, let you guys hear it, and then I'm going to kind of give my thoughts on it.
Do you want to kind of go through that a bit?
Yeah, an example is probably helpful here in thinking about the ecosystem and kind of how it all comes together. If you think about a client who's purchasing a new home, say for $300,000, within our ecosystem, if you look at gain on sale margin in our direct-to-consumer channel, let's say it's a 450 basis point gain on sale margin, we would generate $13,500 of revenue for this purchase. And then if that client is using an agent in our Rocket Homes real estate network, we would generate an additional $3,000 in revenue, assuming a 1% commission fee. And then in addition to that, if you add AMROC's appraisal, closing, and title services, they provide us another opportunity there to earn an additional $1,500. So as you look at this in total and we think about all of the opportunities we have, that transaction would generate $18,000. And it really doesn't stop there, too. If you think about the other things in our business, we've got Rocket Auto, solar is coming, we've got personal loans, which are all really natural extensions of that home buying experience. And these businesses do have a high correlation to the real estate opportunity, getting the reach to the client, the right time to serve their needs throughout their entire home ownership journey. So these newer business areas that we're adding really help us leverage our platform's strengths, especially from a marketing, a technology, and client service.
So I think this example that Julie gave, talking about how many different things they can actually make money off of in the process because of how kind of, again, they're taking this all-inclusive approach where they have a business in the title aspect of the business. They have real estate agent aspects of the business. They're in with brokers and on the retail side of the business as well. They're kind of, really all-encompassing in what they can offer to customers in the mortgage segment. And this allows them to really kind of take advantage of a lot more things that some of their competitors, or most of their competitors, really don't have access to. And so one of the things that this made me think about is even if a customer goes, let's say, with another competitor, let's say they go with UWMC for the actual mortgage loan, Rocket could still be making money off of that customer through the title or the real estate agent, maybe not the real estate agent if they're going through another broker, but through some of these other channels, even if they don't actually get that customer on the actual mortgage loan side of it. So that was really impressive to me. I think that shows how Rocket really has an advantage over their competitors in that segment. And so I really wanted to just share that part of the earnings call with you. The last thing that I want to talk about is the buybacks. Now, Julie and Jay made it really clear in the earnings call, they have a ton of cash. They don't really need a lot of cash to run the business, and so that cash is ready to use as ammunition for dividends, buybacks, acquisitions, things like that. And the nice thing is, just actually about an hour ago, we got their 10Q, and as Julie mentioned, it was going to be filed today, and we got to see that they actually did start buying back shares. Now, it's a very small amount. If I go into the actual 10Q here, let me blow it up so you guys can see this. So they, in the month of May, purchased for about 500,000 shares at an average price of $16.73, and that kind of totaled to just over $8 million or so. So, their buyback program is a $1 billion buyback program. So you can see down here, they have, if I make it a little bigger, they still have basically most of that buyback money left, 990 million or so of that money that is available for the buyback. all the way through, I think, another year or so. I'll have to go back and actually look at when that was instituted. I think we have about a year and a half to a year left on that buyback for the $1 billion. Now, this is one, a good sign. It shows that Rocket is really confident that their stock is undervalued. You know, we've heard them say that before. We've heard them, you know, say that, oh, we have this buyback program, we think our stock is undervalued, but, you know, we didn't see them actually go out and buy the stock, so it's like, are you actually saying it's undervalued? Are you not? But now to see them actually go and purchase shares, even though it's a small amount, it does show that at least at this level, the 1673 level, they think that their stock is undervalued, and they're confident enough that it is to actually go and buy shares. Now, one of the things that this does is if we go and we look at the chart, that basically tells us, if we look in the month of May, the month of May is basically from right here to right here. So this portion where it dipped down, this is kind of right after their last earnings report. We saw this drop all the way down to here, and they started buying. And they bought pretty much throughout the month of May. It doesn't give exact dates, but if you take the average price of 1673, you can kind of infer that it was around these bottoms here. So probably these few days here, and they maybe picked up a little more here. Now what this tells us as investors is that 1673 level, or right around there, if any of you guys have done technical analysis, that is going to be a very strong support level there, because we know at that point that Rocket feels very confident that their stock is undervalued, and they are willing to go out and buy shares at that level. So for me, I've actually gone and put this red dotted line here as that support level here, and I've actually put this alert here, you can see at $17. Just I use a program called TradingView. I can set alerts and things like that. Some of you might be able to do that in some of the programs that you use. A quick little promo here, you can actually go in the link in the description. I have an affiliate link for TradingView, and you can get $30 off your subscription, and you can have the ability to do all of these alerts and things like that I'm doing right here. But anyway, basically what this is telling me is that there's going to be a big support level, as I said before, at around that 1673 level. So what I am going to be doing, you saw me set the alert there at $17. That's mainly going to be for me to, okay, if it's dropped below 17, not saying it's going to, but if it does, I'll definitely be watching the stock very closely, probably be doing some buying. But what I'm definitely going to be doing pretty much starting Monday is I'm going to be selling put options at around the $16.50, $17 level. For those of you not familiar with options, this might get a little confusing. You can definitely go and look up, put options, what a put option is, how to sell put options. It would be a little bit long if I went through all of that in this video here, but basically what I plan to do with these put options, I'm going to sell these put options at about $16.50, either the $16.50 or the $17 price. I'm going to do a little bit more research there, and if the stock doesn't drop below $16.50, if the stock doesn't drop to there, I'll be making money. I'm probably going to do this on a monthly basis, and if the stock does drop all the way down to that $16.50 level, I'm fine buying those shares. I'm fine exercising that option and taking those shares, because if Rocket is confident enough to buy back their own stock at that price, then I'm confident enough to buy back their stock at that price. So that's my plan. That's kind of how I'm approaching this stock right now. As far as how I feel about the earnings from an overall standpoint, I thought they were pretty good. Not the best earnings. Obviously, they missed expectations, but it is nice to see that we aren't seeing operating expenses and gain on sale margin continue to drop. They're kind of leveling out. So I think that's another reason that we're seeing this kind of uptick in the stock, as well, again, as obviously these buybacks. Seeing a company buy back shares, seeing exactly where they think it's undervalued, that's probably the last main thing that's pushing the stock up today, and probably could continue to push the stock up in the coming weeks. So those are kind of my main thoughts on these earnings and what trades I'm going to be making around them. If you have any comments, questions, whatever, definitely leave them in the comments below. And if you found this video helpful, don't forget to hit the like button. Other than that, I will see you guys next time, and have a great day.